And we are live. Hello, guys. A new week, Monday, the 26th of June. And today we will look at Twitter to see what they have had in store for us for the past, I don't know, 5 days or whatever. So let's quickly look into this stuff here. As you can see, we have JC Parrott here calling for, is it time for commodities to turn? We can look at the SP 500 divided by the CRB. And you can clearly see we are at resistance. And this is a bearish wedge coming up here. So the probabilities is definitely in to have a swing down in this ratio here. And that favors commodities overall. So yeah, it really looks like we have a good opportunity here to outperform with commodities against the SP 500. So that's good. This is Jake Meta. He's just he's just showing off this squeeze here, just absolutely amazing. Going back 1 year, or half a year, you can see here all the way up, and this is a bearish squeeze. So the downside is favored more compared to the upside. We could get a blow off top here, obviously, and then a breakdown through the apex, but we will have to wait and see. But this is definitely bearish from Meta, and yeah. I haven't seen how it has done today actually, but we can maybe look into that. This is North Star, Kevin, from North Star. Gold quarterly roadmap. We have a big week ahead. Let's see what he is showing to us here. As you can see, we're coming into this final area here for the remaining of 2023. We have a triple top here, sitting right at resistance, and clearly this lower trend line coming down here, going back to 2004, 2018, and then 23, 22, 23, and now we need to break up to the upside, or it could get really nasty actually if we break to the downside. But in my view, in order for that to happen, you need to have the dollar to spike heavily against inflation, as you know. So yeah, we'll have to wait and see. But the next, I think July, excuse me, will be a big month for commodities if we are going up or down. And gold is usually the leader. So let's see what gold does for us. This is Tavi, a great guy, by the way. You should follow him. He's really, really good. The year-over-year change in SP 500 is now diverging from the ISM New Orders Index. And note the last time this happened was in 2020, the big crash and recession. So you can see here clearly there's a divergence, and the gap needs to be closed due to the correlation that it has. So yeah, last time it collapsed here, as you can see. So will it do it again? Maybe, maybe not. But I like this chart. This is Grady. Again, a guy with long-term, very good technicals. He's very, very good. So he's also a guy that you should follow if you don't follow him already. Let's see what he has to say here. The uranium sector has been digesting the massive move from the 2020 crash lows. Energy Fuels here is the leader, showing signs of waking up. And if you play this right, you can get out of the rat race if you invest into these things. And I agree. So let's see what he's pointing to here. As you can see, the 2011 Fukushima high is here. The last bull run high is up here at roughly $240, $50, $60 for this stock here. And right now we are just barely at $8. So with the past 10 years, we have done nothing. I don't think we will go to the all-time highs, because that would mean that Energy Fuels will have a very high market cap. It could happen, of course, but I will target the 80 in my view here. So a 10x from here, and then I will take profit there. But that's how I play it. So yeah, we'll have to wait and see. But I definitely agree. Energy Fuels is a big winner in this uranium bull market. So yeah. Okay, here we have a fun little fractal here, looking at the Radio Corp of America, going back to this is actually back 100 years. You can clearly see the move up here, then the double top, the 3 and 4, a big crash down into a bull trap, and it rolled over. And what he's pointing out here, this guy Colorado Travis, is the exact same pattern, more or less. And we have a 5 here coming up for this move here, for the bull trap. So if this were to play out, we should see a move all the way down to 4,000, as you can see here, roughly down to number 1 and 2, the lows. That's $4,000, $8,000 for a Bitcoin if it plays out. I'm not saying that it will be, but it's definitely worth to look at because I haven't seen this fractal before. I found it very interesting to look at. This is Simon, also a great guy on Twitter, extremely good technical, and has a lot of useful stuff. So definitely follow this guy. Silver seasonality. You can see here we are at July, June, and we are typically at the lows of the seasonality, which means that the next few days will be to the upside. So hopefully this correlation or seasonality will be the same today as it were last year and the year before, on average, of course. Definitely a good chart here. Yeah, this one I laughed at a bit. This is just Hunt, the 2-year gilt yield. So, and he says UK is fucked. I agree. Look at this here. This is just for the, this is the weekly, I think it is. It must be the weekly. You can clearly see that in like 3 months or so, we went from 3.2 to 5.2. Absolutely insane. You know, the bonds are getting worthless in the UK. And this is just, this could escalate really quickly into other countries and sectors if this plays out. So this is a grim chart if you looking at the overall market. Let's say if the UK has this kind of trouble with their debt, you know, every single country will follow at some point in time. But this is very bad for the UK. Very, very bad for the UK. This is the Happy Hawaiian. Last year around this time, I posted a chart calling for the Fed pivot indicator. For the past 30 years, the Fed had kept rate falling to the lower highs to balance out the increased national debt, which I also have posted a few charts on here and there. This time, they unwillingly decided to set off the debt spiral of compounding interest. You can clearly see here the expanding formation. You know, every time we hit the blue upper trend line, they have reduced rates all the way down. And the low back in the COVID lows here. Now we have spiked up, and clearly we are way above this blue trend line, meaning that the rates or the debt payment is just way higher compared to what the system can handle. Because this right here, the expanding wedge, is basically describing the current monetary system, and right now they're just letting it go out of control, basically. So this is it's a very good chart. I really like it. Grady again. Look here, copper to NASDAQ. Big global inflation always starts with and is driven by commodities. I agree. This chart shows how undervalued copper is versus the NASDAQ. And you can clearly see here that we have a double bottom here in place. Last time it was back in the 2000s, and that's where the commodity bull market really kicked off to the upside. And if you were to put a line here, you can put a trend line here across. So that would be the first stop, and that would mean that copper is outperforming NASDAQ by 5x just to get to these highs here. And yeah, getting higher is just, the numbers are insane, but I think he's absolutely correct here. Again, good old Grady. Then we have Axel Kiba. I think the name is pronounced correctly. Yeah, you can clearly see the triple top here and reversion back to mean, back to the 200 day or the 40 weekly. So yeah, this is still a bullish wedge for now. But yeah, I found it very interesting to see. Here again, we have Jake looking at Apple. Again, similar to the NASDAQ, more or less, you have the green support zone coming up here, and then the horizontal support zone at around 190, let's say. I don't know what it did today because this is a few days old, but still, if we are to break down from here, then Apple is in for a for a grim surprise, that's for sure. Here we have Jay Fong, also a guy that I have learned a lot from, so you should definitely follow this guy as well. He's really good with the levels and the Fibonacci's, so yeah. This is shorter term. This is the bullish wedge that we talked about from the previous chart, and we will see, hopefully it can resolve to the upside. Again, this is pretty old, a few days, 3 days old, so yeah. And then yes, Uselink again, He's insanely good. You should follow that guy. He's the best. Silver mine is divided by silver on the weekly chart. I'm not calling a bottom here, but sometimes stuff just gets cheap enough, in my view. You cannot catch the bottom exactly, but sometimes you have to say, okay, this has gone too far to one side or the other, so now I have to sell or buy. And this is the SILJ, as you can see, coming down to the lower trend line here, going back 7 years. And if we start to see a breakout of the blue line here, that's where silver miners is going to outperform the silver. And that's typically when you see the big rallies. So I love this chart. Of course I do. Okay, let's see here. What does Grady have to say? The inverse correlation to gold versus USD can be strong shorter term, but long term it's not an issue. Longer term, you have to look at gold against the inflation against the dollar. So USD divided by inflation. Then you have a perfect correlation, more or less. And he's just pointing out here, you have the 1, 2, 3 move here, same here, and we should break to the upside, just like here. And then we should be in for a big 5x move for gold measured against the US dollar. I love this chart. Amazing, amazing chart. Yes, use link again. This is silver with a Renko bar. If you don't know what Renko bars is, go look it up. When we take out the $26 in silver, the fractals are set for a quick visit to the all-time highs. And what we can see here is this is back in the actually from the 80s all the way to the 2000s. Big inverted head and shoulders here, golden neckline, and we have the right trend line here coming across. So when we pierced that, it was just a one-way street to the 50 or the 48, but whatever. Same fractal again here, big inverted head and shoulders. And now when we pierce the 26, just like we did here at around 16, 17, whatever, it will be a quick trip, just like this move here, all the way up to here. That's my prediction. So silver 26.2-ish. When we break that on a daily basis, especially on a Renko bar, go time. Go time. Good. What else do we have here? We don't want to cover that one. I think that was more or less what I had for you guys today. So yeah, I hope you like this Twitter recap purely on a technical basis. I know my good friend Andy does it as well, but he takes in a lot of other stuff as well. I want to focus purely on the technicals. And yeah, I hope you liked it. Please leave a comment, subscribe, good or bad. You know what to do. And have a great day. Bye.